This is Justin AMZN for Wednesday, November 20th, 2019. We had a very indecisive day and a few areas of the day that kind of played out indecisive. It could have gone either way. And so we'll dive into those. The first one was right out the gate. We had the open right here, had a quick move down, and then came right back up to 1747 and hung out there for a nice stair step, ultimately breaking out. Wow. Yeah, not drawn. There we go. Let's see. So we had this hammer type candle, just need a little bit more upper or less upper wick and a little more body. This was a nice upper wick, very little body, but then this bullish candle was bullish engulfing and really kind of set the tone for the open. Broke out of the previous two candles. The next candle came back, really coming right back into. Oops, what happened there? Lost the tool. Maybe. No, somehow it's not drawing now. Thought it was drawing. Okay, let me try the drawing tool again. There we go. Okay, so we came into this downtrend channel, bounced off of that. So this really was a breakout of the previous candle, a retest, which was a great place to enter, and then a bounce, and that rallied. And that would have been a great place to get in and take off some profits up here, which is kind of the same move we had from 1747 up, to this downtrend channel. I could have been doing really the same move from about 1747 to here, even holding on a little further. But I guess the question would be, where's your target? Maybe this about the same price high around 1760. It didn't get all the way up here to this uptrend, but it gave us a really nice framework. So if you were taking this bullish and taking some profits, nice, that worked really well. If you were holding on, you probably held down a little too far. Maybe you got trailed out for still a nice gain as it came back down, but it came back down and then it started to hold this channel. This one, there we go. Started to bounce off of that. Nice hammer here. Started to bounce. This looks like a quick double bottom with a neckline retest. This is a breakout candle from that, or breaking out from the hammer. Not an increase in volume though. So all of this, you can see through here, the bullish volume just wasn't there to show that it was going to continue to move higher. And even as it pulls back a little bit, gives you another chance with a nice small hammer, Morningstar reversal here, starts to break out, the volume just dried up entirely. And instead it rolled over. And as it starts to roll over, then the bearish volume comes in. And again, this was a great setup bearish. Coming out of a triangle. So, you can clearly see a triangle like this, which, we already had the framework coming into a triangle with that uptrend and this downtrend channel kind of having a little bit of confluence here saying, okay, something's going to happen. And it was just a matter of about 20 minutes later that it was breaking down. So, having some lines in here really just, helps paint a really good picture of what to, not necessarily to expect, but a framework to trade in. And you started getting this bearish volume. Let's see, was it this candle? Nope, the next one. So this gave you some bearish volume coming in. Just broke down, did not hold 1747, came right through here, started to bounce a little bit, and this was the only retest. And unfortunately, I was looking for it to retest back up into 1750 and hold this as a pivot. And then roll down, and it just didn't get that high. It just about touched 1747, and that was it. And then came way down to 1734, which was again right into our downtrend channel. So this was a really nice place to be buying. This was a really nice place to be buying, and then this was a really nice place to be selling. And that was kind of the key areas of the day. If you were selling here, great place to take target or to take profit at a target down here. And then this was kind of choppy. It looked like kind of a funky double bottom, similar to something like this yesterday. Where the right, the second bottoming was much higher than the first. And then it just didn't really hold a neckline retest. It came down a little further. There's some funny things going on here because it looked like it was going to maybe push up a little bit more. Instead, it went sideways, formed a bit of a double top, started to roll over, and the volume picked up bearish a little bit, and then it just rallied and came right into 1747 to close. Ultimately, having a high wave candle on the day, on the daily. We've got this X marks the spot here on the chart for tomorrow. So we'll see if we get down to 1727.80 tomorrow, which would be a breakdown of this candle if it gets a close down there. We've got really 5 days here of some stair step. And so this would really be a continuation pattern. And then seeing this breakdown tomorrow would be a nice, like I said, continuation of some of this bearish move. It's a little harder to see here, but I guess just the move we had today starts to look a little bit more like like this. The last couple of days here was a little bit more of a flag to the downside. Let's see what that does. That's going to jumble some lines. So we had a nice move down, a little bit more of a flag, and now we've broken down from that flag. So that's what this was really trying to show, is this could just be a bit of a flag here. And so seeing that flag really be taken out, taking out the low from yesterday, even though today was a high wave candle, it looks like this is starting to break down. And if it does, it could really get going. But we really need to see a close even further down. Close ideally down in the 1720s would help. Or the next line below that I think is 1714.50. We can get a close down there. Then this is definitely a flag, and it's just this was just a stair step. This was a flag, and it should continue. But we'll see if we get that. It always does something weird depending on where these lines are. I don't like looking at this on the hourly. The 5 minute cleans it up with where the lines are. And so we'll get in here and look at, okay, what could you have done to trade this? Looking at some calls right out the gate, put in a nice kind of base here around 850. And so with this candle breaking out and retesting the low in here, it actually low at 855 on this candle. But really you could have been buying this like 9x8. Somewhat ignoring this lower wick, but it put in enough of a base around 850 that, once it broke out and went up above 10 and then came back down, the challenge is if you were looking for it to pull back under 10 and you got in on this candle, it had still some room to pull back, and 10x9 would not have worked here. But getting your stop below this base and an entry above it. So that's what I'm saying. Getting in at like 9x8 would have worked great. And then if you were taking profits as it was getting up into this downtrend channel, probably on this candle here at 950 or the next one at 915. Sorry, 910 and 915. That would have been getting out at 910, 915, maybe 13 or 14. So from 9, that would have been a nice, 4 or 5 hour gain. And it continued higher, not necessarily, grabbing more, but, you had the high up here from the previous day around 17 that, could have been a target. 17, 18 could have been a nice target. It's just a matter of, would you have held through that, and would you have really had that as a target, or maybe were you looking for 20 for it to continue up and touch this uptrend line? And still, 4 or 5 hours just for a quick move like this would have been great. We were talking about, here, we'll jump over here because this was, again, being bullish from down here. We put in a bit of a base. We bounced here, but as it bounced on the option, it turned into a little bit more of a base. And so getting in through here would have been probably buying 6x5 and it just didn't really move very well. Even dipping back down to being down on the position, um, really only gave you an R getting out at 7. Um, and that would have been riding this, from anywhere in here, buying anywhere in here back up. It just didn't move enough. So the market makers weren't giving back much premium after this big bearish move. So, the bulls just weren't even we're looking at the 1750 call. It's not that far out of the money. It just, after this big move, it seems like the market makers were holding it down, or holding the option price down, even though it had a nice rally back up to 1747. So that's really just what the options are showing. And so, if you're a bull and you're getting in here looking for it to continue to bounce up, it could easily roll over and take out this level and lose even more premium, tomorrow or the rest of the week. So it just didn't work, buying here. This was a great place to be buying. This was an okay place to be buying. You just needed to recognize you've had a bigger bearish move and you're just really scalping a bounce. That's all. So that's the big difference with buying here versus buying here. Now let's look at the puts, getting in. Well, if you were looking for this to move bullish in this area, really you had a nice place to get in, like 12 by 11. It came into $11 here, but it didn't hold that as well. This looked like it was going to break down. So this being a double bottom, getting in on this after this hammer here at 1045 would have meant, probably 12 by 11. Started to bounce, came back into the $12 price. Then it comes into, less than 12, starts to bounce. And maybe at this point you're getting out because, okay, you didn't want it to dip below, should have held. You got out here, and if you didn't get out, hopefully you had your stop, at 11 and got filled there. But with how quickly that rolled over, may have gotten some slippage. And, that's no fun to have slippage on a move like this against you. But it just, this just didn't work for it to continue bullish. And like I was saying, the volume really supported that. So if you were looking for this for a bearish move, it's still, you need to close below the hammer here and below this hammer here. And it did that on this candle. So this is 11:55 time. And at 11:55, this is the 1750 puts. 11:55, it had a really large candle, $2 range candle. And so it would have been a bit of a challenge to be buying this $100 risk. You could have been getting in, as this candle closed. So that would have been 950. But your stop still, reasonably should have been under 8. Otherwise, you need to be a little further out of the money. Now, with how quickly that started to move, it would have been tough to necessarily even get in there. But 950, then it gapped up for the next candle's open. Getting in at 10 on this candle, 10 by 8. So that's $200 risk. But that it moved so quickly. So maybe the 1725. We're looking at some of the other ones this week too. So let's see what this one was. Oh, this was really cheap. 250 by 150. Could have done that. It still had a great move. We got into the 1735 price barely. We got into 1734. So this got in the money up here. And the 1150 price is already up above 4. So 4 by 3 would not have worked here. That's tough. So, just getting the right option and the right entry and stop. All right, 1150. We got to close up here above 3. Yeah, even this was more than less than a. Oh, yeah. Okay, so this one maybe 350 by 250 or something. 325 by 225. But again, you're hunting which option to use as this is moving and going bearish. It's like sometimes you just want to get in. And so, this one 6 by 5, that would have been a little tight. You probably want even this one 6 by 4. Yeah. So it looks like it would have been a lot cleaner to get into 1725. It's further out of the money. We're still $10 out of the money up here. Probably give you the best entry off of the 1150 candle. So getting in 250, even 250 by 2 could have worked. More comfortably would have been 250 by 150. And then you get out as it comes into that support around 7. And so, if you got in at 250 going up to 7, that's 4.5 hour. Had you done 250 by 2, you knocked out of the park, because going up to 7, that would have been 9 hour. So anyway, with how sparsely traded this was through here, it's still put in a really nice base, but waiting for that to break down bearish, and the option to break out bullish. You really could have had just an order sitting out here, kind of a market puke order, a stop limit at 250, because that was the high. It was above the high here. 250 by 2. I'm sorry, 250 by 150 could have been an order just sitting here waiting for a move. It gave you plenty of time to set that up as this was forming. And then it's like, okay, all it has to do is break down here. You should get filled, and either got filled on this candle or this candle. Actually, I think you got filled on this candle. So clearly moving bearish from the downtrend channel. So yeah, a lot of opportunities today, either direction. Again, zooming back out, we've been all over the place. This shows it's a really nice flag, and we got a continuation lower from that flag today. On the daily, it doesn't look like it. On the 5-minute, looks like it, and overall, it seems like we still have some bearishness coming in here. The bearish volume has been key. We've had some interesting volume spikes, today included, even though it's high wave candle. Now, the other perspective is if we can get a close up above today's candle, it looks like whichever way we get a close, we should continue that direction. This could look like a double bottom down here. It could really bounce and continue up. So we just need to see where that close is going to go, which direction it's going to go. So I'm leaning bearish, and we'll see if we get it tomorrow. We get an X marks the spot here tomorrow, or if it's going to take into next week to have more of a roll. But we shall see. Hope this helps. This is Justin AMZN. Thanks.